Folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and it is the 17th of October. We are past the midway point. We have a lot to go over tonight. We're going to go over the opening futures action in a moment. Before we proceed, we're going to talk about our sponsor, but even before we go to that, we're going to talk about valuations. We're going to talk about, do I think that this market is going to put in new higher highs this week? You saw a reversal on the small caps on Friday, but the large caps did very, very well. We're going to talk about a couple of indicators that I use to determine at a time like this whether or not the markets are going to break out or break down. We're going to go over economic data. We're going to go over inflation. We're going to go over the incompetence, folks, the incompetence in Washington, D.C., or it's just very, very efficient, nefarious behavior, one of the two. So before we get started, let's give a shout out to our friends over at TrendSpider. Folks, if you're not currently using their software, please give it a thought about taking a leap of faith, using automated technical analysis. I use it all the time. It is a time saver. I'm going to be using it tonight when I go over our chart requests. I have a bunch to go over here, along with our watch stocks for the new trading week. So you can see how I set up alerts, how I leverage the data that TrendSpider provides, whether it be bullish data, bearish data, whether we want to enter a trade. We can set up alerts to tell us when to get out of a trade. It's very flexible, and I would strongly encourage you to use the software, automate your grunt work, speed up your technical analysis, and improve your accuracy. Reduce costly analytical mistakes, find winning chart setups with their scanners, and time your trades with precision. Time your trades with precision, not precisions. Head on over using the link. If you're on Twitter, link above in my bio area. If you're on YouTube, I think I put it in the description area. Discount code. What is the discount code? I always get it backwards. I think it's 35CON. Let me verify that. That is accurate. 35CON. TrendSpider. Head on over. Take a look at their demo tour, 7-day free trial offer. TrendSpider. Okay. Let's get to the opening futures action. And this is the Dow Jones Industrial Average. Am I not live here? I have no chats. Unheard of. All right, I'm not sure if we're live here. Twitter. Are we on Twitter? We appear live on Twitter. Good. YouTube. I'm going to guess we are. If we're live on Twitter, we should be live on YouTube. If somebody could drop a comment in the chat box, whatever platform you're watching on, and that way we know we're good to go. As long as we're live on Twitter and YouTube, we can proceed. And we are live on YouTube. Okay. There we go. Everything just populated. The whole crew's here. All right. Talon. Hey, brother. Franklin, hello. Thank you for that. You're looking live. Thank you very much. I'm not sharing my screen, though, am I? I am not. It's showing me that I'm sharing my screen. I think I am sharing my screen. Okay, yeah, I am sharing my screen. Good. Baba Pops. Hey, brother. Abel, hey, Bob. Hope you had a good weekend. Same to you. You're live on YouTube. Thank you, sir. I appreciate that. RB, thank you very much. Okay, let's let's take a peek at the opening futures action. This is the Dow Jones, and we have a new week high. Let's go to a 4-hour chart. We have a new weekly high. So what I want to do is set up an alert. Let us know if and when we hit new all-time highs. So very, very bullish price action so far. We're up 0.15%. The fact that we have a new weekly high is more important to me than the percentage move up higher. The probability of us continuing up higher is very favorable. Moving on to the S&P 500, up similarly on a percentage basis. We also have a new weekly high. Let's get rid of this. We still have a way to go to hit new all-time highs, but I think that's where we're going. Okay, so Dow, S&P 500, new weekly highs, very favorable. The NASDAQ, again, up similarly on a percentage basis as the other large caps. The NASDAQ running up and into resistance. We have a new weekly high. You can see that we've been stuck in a trading range for a while. We did break out back here in mid-August, and we did a round trip. We broke back down. That's a breakout point failure. If you wanted to be conspiracy theorists, which I happen to like to be at times because I'm a contrarian, the formation that we're seeing here is a head and shoulders setup. Left shoulder, head, right shoulder. But you could just as easily see this thing breaking out to new higher highs. I'm completely non-committal on that head and shoulders setup. We do have a resistance level here at 15,185. We're struggling a bit to get through. Now, the chart I'm really curious about is the chart of the small caps, which, as I mentioned earlier, flashed a bearish key reversal bar on Friday. Here was that rollover on Friday. So this is something to keep an eye on. Hey, Tom, SB and CCJ, if we have time, I'll definitely go over them, Tom. I have a bunch to go over tonight. Okay. RB, with oil and the 10-year going up, this could be a bull trap. Yeah. So how do I put this? When I'm going to go over this kind of in a way in a little bit. It's all about perception, right? That's what the market is all about. And the perception, whether you believe it, don't believe it, that when yields go up higher, when oil goes up higher, when commodities go up higher, there's demand, right? And what you interpret from that, at least historically, is that you have strong economic growth. But then as you press at that rubber band, you stretch it, you stretch it, you stretch it, you stretch the consumer because all of a sudden he's not buying discretionary goods. Most of his disposable income is gone now. Now it goes towards staples. So all of a sudden the party gets a lot less joyful, right? And the markets begin to buckle under the weight of what was perceived to be very good for the economy, all of a sudden turns toxic. So I'll talk about that more in a moment. So the Russell, no new weekly high. In fact, in the case of the Russell, I want to know, do we put in a new daily low? We're too far away from the weekly to worry about that yet. A new weekly low. Okay. Moving on. Let's bring up the dollar. The dollar is under a lot of pressure. I did the week ahead commentary. Members, it's posted in the members area where we did a closing review of the major indexes, the dollar as well, along with bonds and yields and whatnot. And the dollar's under a lot of pressure. And it remains under pressure here this evening. And I want to know, do we put in a new daily low? Let's do a deeper dive here. I want to get a better feel for how we open. Ooh, this is not a good open. They just gapped it right down. Okay. Not a lot behind it just yet in terms of volume. I'm very curious about the US dollar. Because it influences our commodity trades. We have a lot of gold mining stocks, silver mining stocks, silver. Speaking of those names, let's take a look at what gold is doing. Gold took it on the chin on Friday. Yeah, that strong retail sales number come out. It was a complete risk on trade, and that meant that they wanted to sell gold. I think that this is just another opportunity for institutions to go buying the dip. You've been seeing this since mid-August. Major sell-offs on gold. What happens subsequent? Gets ripped right back up. So they're knocking out all the week longs, and you're just seeing the gold miners just drift up. So we're very bullish on gold. Yes, it's down on the session, and it can go lower here. Obviously, we do have a new. I believe no, we don't. We don't have a new daily low. At or below. Okay. So the dollar's down, gold down. Okay. That tells me that in all probability, bond yields are higher. Where are my bonds? There we go. Yep. They're knocking bonds down yet again. And that means that yields are surging right now. This is a pretty big move. This is a new weekly low. The banks are going to fly tomorrow. I'm telling you right now, we talked about the banks over the weekend, and I'm going to go over the chart in a moment. But the banks, despite mixed earnings last week, good enough. And the reason why a lot of these banks didn't do worse. I mean, JP Morgan, revenues were down across the board. The only bright spot with JP Morgan was their NIM, net interest margins. That's the margins you make on loans. How do you get better margins? Rising interest rates. They're rising yet again. So watch the banks. The banks are probably going to rip out of the gate tomorrow, assuming that this trend on yields continues, and that is higher. Bonds lower, yields higher. Great for the banks. For that matter, good for the small caps, which oddly enough reversed on Friday. Let's take a look at silver. Silver is up. Nice inverted head and shoulder setup here. Left shoulder, head, right shoulder. We are above neckline. Silver's broken out. Sticking with the commodity trade for a moment, copper. I'm going to talk more about copper, but on a higher level view, a weekly view in a moment. Copper, new weekly highs. Very strong. RSI overbought, but copper's going up higher. Oil. Oil is a monster. Oil is going up higher. Where's my natty gas? Where is natural gas? Oh, wrong chart. Natural gas gapping down. No great shock. Natural gas, the chart of natural gas does not look good on a daily, weekly time frame. It's going to come in some. Russia bringing more supply online. That's the story that'll put the pin in natural gas, which has really been on a tear. Sticking with commodities, gasoline ripping. Here's a weekly view. Ripping. Home heating oil. Thank God I filled up. Where's home heating oil? Here it is. I knew I brought it up. Home heating oil. No new weekly high yet, but we are up. Home heating oil. Folks, I just don't know how to say this. This is a catastrophe. This is a major, major problem. And Wall Street doesn't care. Nobody cares. Look at this breakout we're going to see on home heating oil. This is a 4-hour chart. Not insignificant. What else do we want to go over here? How else do we want to depress ourselves? Let's take a look at cattle. Cattle ripping. Here's a weekly chart. This chart is going to take off. It's going to take off. There's an ETF called Moo. Moo. Let's bring it up. The only reason why I remember this symbol is because I'm an idiot and I love the symbol Moo. This is beautiful. As a matter of fact, I'm going to set myself up an alert here for Moo. Look at this chart. This is a weekly chart, folks. This is going higher. Commodities, that's the place to be. Commodities. Soybeans, hammered. Agriculture stocks are not doing, oh, excuse me, agriculture commodities have not been doing well. Soybeans weak. Oats were doing good. They still are doing good. Wheat, I haven't looked in on. Let's check in on wheat. Once you get the food stocks, we'll go with corn. Corn's up here. Corn's been weak. Wheat's not bad. Wheat's not bad. It's consolidating. WEAT, wheat, ETF. ETN, I should say. ETN. And there it is. So these charts are looking outstanding. And these are weekly charts, not intra-period charts. So buckle up. They're going up higher. Soybeans, corn, lagging. Other names doing very, very well. Let's talk about 480 shenanigans. Alcoa ripping. Yeah. Aluminum is just on fire right now. Yes, definitely. Randy, IWM traded horribly on Friday. Yeah, bearish key reversal. Down, but not out yet. I have a short position. I wish it would get knocked out, but it won't. If we put in a new weekly high, I'm probably going to stop out. Tom, gold is in a battle for 1750 versus there's a point to be made there. The weekly chart is a bit iffy on gold, and I'm not going to be a bit surprised to see them try to knock it down one last time. But that washout, you got to buy it. You got to buy it. And gold stocks last week just ripped through the ceiling. Gold was hardly up on the week, but the gold stocks ripped last week. And I've been saying that. Watch the gold stocks. They've been fluffing off rising yields. They've been fluffing off the rising U.S. dollar. Let's take a look at earnings this week. All right, so earnings become a lot more interesting this week because we will be trading earnings trades. The names that we will be trading are Netflix Tuesday after the close. Maybe ISRG, Intuitive Surgical, also reporting after the close on Tuesday. On Wednesday, Tesla is on our list. Earnings trade. So let's stop there for a second. Will I be buying the stock or will I be shorting the stock beforehand? No way. We'll be trading the options because the options, as you go into earnings, they become fat, meaning the implied volatility of the option becomes very, very expensive. You have a lot of speculators in there. They're bidding up the value of the options. What causes option prices to increase? Demand. Simple as that. What causes implied volatility to increase? Demand. Simple as that. So do I want to go in and do I want to buy the options? No, that's not what we do. We sell the options. We go deep out of the money on the put side. We go deep out of the money. Same width of strikes, same expiration date, but deep out of the money the next day, you get volatility compression, meaning all the love for that option, even if they beat or missed, it just evaporates. And therein lies our profit. So we do very, very well. And we will also be trading Chipotle, probably. I'm missing one. I said Netflix, Tesla. I'm missing another one. IBM? I think it's IBM. We'll put IBM up there for right now. So those are the names that we plan on trading this coming week, not to mention our watch stocks. So stick around. Going into the new trading week, we have the Buffett Indicator. We are overvalued, strongly overvalued. My apologies. At current, we're only 2.3 standard deviations beyond historical trend. We've come in a little bit there, but still very, very expensive. Moving on, Schiller PE ratio. Believe it or not, for whatever reason, the Buffett Indicator got less worse last week, meaning less strongly overvalued, while the Schiller PE ratio probably crept up a little bit versus the prior week. Moving on. So the S&P 500 last week had a very strong showing. Bullish key reversal bar, and we broke out. The question is, do we get a continuation move up higher? Or do we fail and roll over? We keep it very simple here. At a time like this, I bring out the old adage, the test is always at the top. And the test is this. Do we break out? Do we break out above 45, 45.85? Simple as that. If we don't and we roll over, we put in a lower high, we'll be watching to see whether or not we take out 42.78.94. If we do, new bear market. If we take out the prior high, well, we're going a lot higher. So how do we know which way this market's going to go? What indicators might we be using to tell us which way this market may be going? And I forget who mentioned it earlier about oil moving up higher and the 10-year yield. Good point. But you also want to take a look at lumber. Lumber moving up higher. We rallied up last week, up and into resistance, backed off. Still, very, very strong price action. This is an indicator of economic growth. You're seeing enthusiasm, okay? Enthusiasm. People are willing to pay the prices for lumber to build homes because they expect to get a return on their investment. They're optimistic. Copper. Dr. Copper he does a pulse check of the market in and of himself. And Dr. Copper last week was up over 10.5%. So what story is Dr. Copper telling us? Market wants to go higher. What about gold? Gold closed up last week, but at the end of the week, you saw risk off and money flowed into equities. So where do I think that this market is going to go? I don't have a crystal ball, but given the technicals of the S&P 500, given the commodity complex and the enthusiasm that we're seeing and the lack of fear in equities and the lack of that fear not finding its way into gold, we're probably going a lot higher. Economic data that was released last week. NFIB Small Business Index missed. CPI hotter than expected. At the core, a little bit less worse. You saw initial jobless claims come in better than expected. Good stuff. Great to see people not getting laid off. The PPI came in less worse than what was expected. Retail sales on Friday, very, very hot. Far more hot than one would expect. So, as always, you always want to look at both sides of the coin. So you look at the retail sales number, you say, wow, man, That's great. People are spending, they're happy, good times, maybe. But people aren't going back to work. They're not going back to work. You're not seeing them get laid off as much, but they're not going back to work. In fact, you're seeing, due to the mandates, you're seeing not layoffs, mass firings. I don't know what they're calling them. But when you take a look at the Empire Manufacturing Survey, you would think that with retail sales coming in so hot, manufacturing would be doing great. And New York factory activity moderates in October. So we had a very hot retail sales number. We had a cooling of manufacturing. So from an economic standpoint, the way you want to look at it is this way. Okay, so we have less people working. You have the government paying people to stay home. Okay, so we're not producing as much stuff as we should have, but retail sales are booming. Therefore, there's demand by the consumer, yet nothing's making it through the port of LA, and we're not making it here. So what's going to happen to prices? You have far too much demand driving prices up higher. Prices are going a lot higher. There are too few goods, too much demand. And another indicator of the lies out of Washington, D.C., going back to the CPI data. All right, so the headline number was 0.4. All right, so what is that on an annualized basis? .4 times 12 equals 4.8% annualized inflation that the government's going to admit. I don't like to use the government's numbers. I like this number better. No hedonics, no adjustments. This is the U.S. import-export prices for the 12 months moving. Now, we saw a big surge up and into May where we hit a high of 11.6, but we pulled back. The 8.9% increase in prices. Something just fired off. Russell 2000. This is just a new session low. Let's see if there's anything behind this selling. Not a lot of volume. Not a lot of volume. Okay. So coming back here, last week's read on import prices jacked back up to 9.2%. So don't look at CPI. You're not doing yourself any favor. Look at import-export prices. It's more of a reasonable read on inflation. A word of the weekend is going to be, I should say the word of the week. The weekend's almost over. Incompetence. And incompetence, inability to do something successfully, ineptitude. And here we go. Let me play this.
So we're my outside the flag today, and I think that's appropriate because it signifies an America that's in distress. And maybe some people don't know this, but my dad just let me know this. a text message went out last night from the Secretary of Defense to all the active military personnel saying, by 10 a.m. you have to go get the magic potion or you're going to be court-martialed. And so as a result of that, 12 F-22 pilots, the most highly trained pilots in the world, walked off the job. That's 12 million-dollar aircraft grounded now. A dozen of the best pilots in the world, thousands of hours of training, millions of dollars of training, off the job. 16 crew members for B-52 bombers walked off the job. That's just 2 air bases. My aunt, who is a KC-135 boom operator that refuels planes, isn't getting the magic potion. She's going to walk off her job too, most likely. So now we're reached this point for all you dumbasses who have not been speaking out about this and the mandates, the people who are quiet about it, the people who are pro-mandate, you're to blame for the situation that we're in because we're going to a bad place. The military is being compromised at a rapid rate, and with the F-22s being grounded, you could kiss Taiwan goodbye. I would hate to be a Taiwanese citizen right now. So this is probably not covered anywhere in the media, I'm sure.
All right, so you get the picture. All right, so it's DOD, Department of Defense. F-22s, folks, there aren't many of them. So if you get only a few pilots that quit, that's a major hit to our ability to fight back in a time of war. Moving on. I'm going to skip this. I already went over inflation. So Buttigieg, a lot of people knock the guy. He's the Secretary of Transportation. They knocked the guy for taking his paternity leave. I don't knock him for that. What I find most disturbing is that nobody missed him. This guy's been gone for 2 months. Nobody missed him. And it would have been nice if he would have told, or maybe he did, told prior to taking this job that for 2 months he wasn't going to be around during the reopening of the economy. But more ineptitude. Fauci tees up unvaccinated blame game over potential 5th wave. So here's what you're going to see. The efforts on the part of the government to demonize the unvaccinated, whether or not you're unvaccinated, vaccinated, doesn't matter to me. I don't want to know your business. It's certainly not the problem, but they are going to scapegoat people. This guy here, I forget what role he's in here, McAdams. This guy here, he came out and said it. We're going to have to terrorize people to get vaccinated. Here, Treasury official claims inflation part of the economy in transition. Only way out is 100% global vaccination. Well, that's one way. That's one way of looking at it. Another way of looking at it is stop locking things down. Stop preventing people from work. Stop telling people you can't go to work unless you get the jab. Stop paying people to stay home. Stop it. Allow the free market to take charge. Stop with the centralized planning. This is what you get. You've seen this throughout time immemorial. Every single time you get central planning, this is a type of incompetence that comes with it. And the resolution to the crisis that they bring is more government. So that's why the word of the week is incompetence. So as we have our incompetent NIH director, our incompetent transportation secretary, a moron over in Treasury, blaming unvaxxed for inflation. Folks, get ready. We ain't seen nothing yet. Because when you take a look at the velocity of money, and I've talked about this quite a bit, this chart only updates quarterly. So now that we're in the final quarter, we finally have new data. And I'll tell you what this looks like to me is that I always like to say that you always want to, before you buy a stock that's been in a downtrend, you want to make sure it's stopped going down. That's step number one. It's got a base, consolidate, check that box. We did that. Step number two, you want to see a higher low. We're doing that. So for those folks not familiar with what the velocity of money is, this is the true driver of inflation, and we ain't even started yet. So the velocity of money is the number of times the US dollar or a dollar will change hands. And we're about to go ripping up higher, and we're about to normalize. The problem is we don't have the goods, and we don't have the workers. We don't have the production. So as this begins to normalize, this only slight pinch that we're feeling right now, it may feel like a really hard grab and it's shaking. If you're middle class to underclass, yeah, we're feeling it. But we ain't felt nothing yet. It ain't here yet. Velocity of money has yet to rip. Once it does, look out above, and they're going to blame. Once everybody's 100% vaxxed, they'll find somebody else to blame, but it will not be them. It will not be the politicians. And here's a perfect example of what is waiting for us. I love this diagram. Here up top, printed paper dollars behind the reservoir, behind the dam. And here's the Federal Reserve. The cracks are appearing as we speak. What are they talking about now over at the Federal Reserve? Why can't they raise rates? Well, we don't have enough equity. We don't have enough inclusion. Global warming and COVID. So it's now official. The Federal Reserve is now a branch of Treasury. And here's the unsuspecting populace. Unfortunately, there are over 30 people on here right now. At least you're spending the time looking at what's coming at us. The vast majority of people out there watching Dancing with the Stars or doing whatever have no clue about what's about to hit. This tsunami of debt. And they're going to pick your pocket. And you would think that the Republicans would be getting ready. Well, you do have some. But as typical as Republicans are, they never seem to fail to grab defeat from the jaws of victory. Or is it victory from the jaws of defeat? They are skilled experts at it. So here you have this growing wave of anti-communist, anti-democratic feelings. So what are they doing? They're splintering off. You have most of these people I don't know, but a few of them I do, and they are just nefarious. Adam Kitzinger, I have a Twitter war going on with him. Moron. I'll get more to Adam Kitzinger in a moment because he got his comings. Evan McCullum, ex-CIA, ex-Wall Street. This broad here, Murkowski, I can't even look at her face. Liz Cheney, old photo, doesn't look halfway as pretty as anymore. Anti-Trumper. Mark Kelly, anti-Trumper, anti-2A. These people will do anything not to have a President Trump back in. Listen, I'm not saying that Trump was the end-all, the be-all. I think that he should have not beaten up Jay Powell. Jay Powell was doing the right thing. He was normalizing yields. He was doing the right thing. And then he got clubbed over the head like a baby seal. So the Kitzingers of the world, the Liz Cheneys of the world, they wanted to play nice. The Murkowskis of the world, Kellys of the world, they wanted to play nice with the Democrats. They went along with the second impeachment. What was the thanks of Adam Kitzinger? What did he get? He's being redistricted. I sent him a nice message. He's being redistributed. They're going to take away, the Democrats are going to take away his congressional seat. They don't need to vote. He's going to be gone. Poof. Didn't exist. Goodbye, Adam Kitzinger. Couldn't happen to a nicer guy. Prick. And all the while, as we here beat ourselves up with lockdowns, finding domestic terrorists and people that don't want to take an experimental drug, you have the Chinese that overnight launched a hypersonic missile, a glide vehicle that is capable of carrying nuclear weapons. They circled the Earth, one projectile last night. What are our generals doing? This is from Major General Joe Clyburn one day ago. Why the Army thinks a French manicure is an obnoxious color compared to the civilian world. I'm not getting to read this. I can't even read it. This is what she's tweeting about. Here are the Chinese hypersonic glide missiles. Well, beyond us. Our CIA, our intelligence community, they were shocked. Maybe they should stop spying on the citizens and start looking at our enemies. Just a thought. So going back to and leaving off with this disturbing photo of Major General Clyburn, the word of the week:
incompetence.
Incompetence. Let's do some chart requests and take some comments. Michael, hi gang, sorry I'm late. Caught the new Bond flick. How was it? Oh, spoiler alert. It's about a lab-made virus turned bioweapon. Go figure. Thanks, Klaus Schwab, for slapping us in the face no matter where we turn. And Klaus Schwab is a Bond villain. Intel may be for selling option premiums. Yeah, I would wait for immediately before their earnings report. Let that implied validity fatten up. Mass walkouts, mass non-compliance, absolutely. And you know what? Let's go back to that for a moment. You know, a lot of people out there, and I'm not going to disclose whether or not I'm vaxxed or not vaxxed. It's not your business, and yours is not my business. We need to go back to a time where, you know, you want to disclose that information, do so if you want, but normally you keep it to yourself. You know, I think that's the appropriate thing to do. That's just simply appropriate. The thing that people out there that are vaccinated, and the majority of people are vaccinated, and they may be feeling all warm and fuzzy that, you know what, the government's not after me yet. Not yet. They got you to take a jab. If they got you to do that, they can get you to do anything. If they got you to inject an experimental drug into your body, they have been so emboldened that they can get you to do anything. If you did it on your own, that's fine. For all I know, this is the best thing since sliced bread, this drug. Did you see Amazon got a shipment of their own containers through Houston Port of Entry? Great location, actually. I didn't hear about that. I know that there are 1 million containers that are floating off our shores. Costco chartered Xmas speed to ensure goods here. Will they charter a plane or chartering planes? BT. If we have time, sure, Randy. Oh, RB, you always give me the information, man. You're always watching the futures. Good. We're going to circle back. We're going to check out the futures again in a moment. Thank you for that. RB, wasn't it you that told me about gold diving in the middle of August, that Sunday night when it took a nosedive? Bitcoin will literally go to the moon or it'll head to the center of the earth. I'm torn 50-50. Why? Because I did a research on Mr. Ponzi. Why would they be howling about Bitcoin? Keep it to yourself. Okay. No, you're not off base. You're not off base. Well, time will tell. And the thing about Bitcoin that a lot of people said that it'll never be the new gold because there are no futures being traded on it. There are now. There's an ETF coming out this week based on futures, not on Bitcoin. They're not going into the market to buy Bitcoin. They're going to be funding that ETF with futures. So expect manipulation of Bitcoin. You're welcome, Michael. They've been flying nonstop over my town. Yes. All right. Those strains of Southwest pilots refuse to be vaccinated. Now company says it's okay. Also, did the company say that they're going to back off or no? I hadn't heard that. If that's the case, I would love to hear the company wised up. A friend of mine works at the docks at night shift. Lots of thrombosis, strokes on the young people. Yeah, I mean, the fact that they don't talk about the statistics, the real statistics, is so disturbing to me. So disturbing. I knew somebody was going to ask me this. What's the name of the ETF? I don't know. I heard it. I was listening to Peter Schiff today at the gym, and he mentioned it. I don't know the symbol yet, but I'll find out and I'll share it. All right, let's circle back to futures for a second. I'm curious. Russell 2000 is stopped going down. Let's take a quick peek at the NASDAQ and S&P 500. First off, let's go to gold. Gold's not positive. Nice bullish reversal bar. Nice. Good. That's good. Where are my futures? S&Ps. There we go. Oh, look at this, huh? Okay. Very interesting. Very, very interesting. Let's create an alert. Let's see whether or not we get a continuation move lower. Keep in mind, folks, that we broke out on a weekly time frame. We may just get a retest of the breakout point. Oh, I'd always do that. At or below. At or below. All right. All right, that's good enough. I got the feel for what's going on here. Let's do some chart requests. All right. IRSRG will start off with set to report earnings this coming week. It's consolidating very nicely. Again, folks, when we trade these earnings trades, we are not taking a directional bet. We are quite neutral. As much as we can be. The weekly chart of ISRG looking very, very bullish. Nice week last week. Stokes is still declining, and they're down below 50. Rallies tend to fade. That's my caveat with ISRG. Rallies tend to fade with Stokes trading down below 50. Word of warning there. But the daily chart is looking pretty good. All right. For RB, BBIG, Inco Ventures. I have gone over this one before, I believe. Yeah, I did go over this one. So it did back off, or it has backed off. This is a monthly chart. Weekly view. Monster week last week. What I would do here is this. You have a lot of resistance above here. I would like to see a retrace all the way back down to this line in blue. These are the automated trend lines. I'll take them off, throw them back on. That's the algorithm using it. As a matter of fact, for those just joining in, Trend Spider, 35% discount code. All right. As a matter of fact, here is the link. I don't think I put it in. All right, there you go. Okay. Watch for a retrace back down to 788. Where did we close last week? 823. I would stay small. And I would get really excited if we retraced all the way back down here to around 639. Let's call it 650 per share when you add in the sensitivity. That would be a great point to add more. Daily chart. Yeah, you're probably going to get a retrace here. So here are our alerts. This one, no doubt, is going to fire off. But if you see the markets begin to come under pressure, not even break down, but just come under pressure, doing retests of the breakout point from last week, maybe you'll see a pullback all the way down to the support level. That would be really, really attractive. It is a rising support level, and I would look to get involved at that point in time. John Spencer, thank you for the super chat. Appreciate that very much. You're welcome, RB. Anytime, man. John, did you put in a request? Or are you just doing this out of the kindness of your heart? Thank you very much. SCCO, for, I think it's Franklin. Oh, this is copper, Southern Copper. Yeah. This is a good one. Oh, really good. This, my friends, is a buy. Smash that like button. Thank you, Michael. Yeah, please smash the like button, please, folks. All right, so Southern Copper has a major breakout going on here on a monthly time frame. 68.14 is the next resistance level. Weekly chart. So you may get a bit of a retrace this coming week on Southern because we rallied up and into the 50-period moving average here in blue. It's probably not going to go shooting straight up. It may if copper continues a strong move up higher. But I think you're probably going to get a couple of days worth of a pullback and then another run at it. Volume last week was outstanding. I like the setup here. Now it's just a matter of when. Avoid right now. Oh, you got to avoid because we are seeing a major breakout, but we are trading up and into the third standard deviation Bollinger Band. This is not a short. Simply because I'm making that observation does not make it a short. It could just simply trade sideways and then resume its uptrend. So the question then becomes, what looks like a good support level at which to buy? Right here. We'll probably be there this week. So SCO looking very good. I may even sell some puts against SCCO. That is a bullish trade, not a bearish trade. When you sell the puts, you're the banker, you're the casino, not the gambler. We will be the casino, not the gambler. Okay, made a note to myself. Let's talk about our watch stocks for the coming week. Tupperware. Weekly chart. We broke out the week before last week, a bearish reversal bar. I'm looking for a retrace. I already have my alert set here. When does this expire? I still have some time left. We're looking for a retrace on Tupperware down to around $22.50 per share, give or take a dime. Daily chart. I think we're going to hit the support level given the bearish key reversal bar on Friday. So Tupperware going lower. Lots of shorts in this name looking to get squeezed. And in fact, let's check out seasonality. Southern Copper going to 76 in 2 weeks. Could be right for all I know. Good looking chart. This is all the data that's on Tupperware. We can't do seasonality on Tupperware. What else do we have? Oh, the banks. I wanted to talk about the banks. We know that overnight, right now, yields have a new weekly high. The banks, here's the value of the automated trend lines. Take them off. Put them back on. There's your breakout. Major breakout on Friday. If you thought that Friday's price action was bullish. You ain't seen nothing yet. Here's the weekly chart. Bullish key reversal bar. Look at how far down they took the banks last week to then close them positive. This is going higher. So I mentioned earlier about how you use TrendSpider to help manage your trades. So if you have a position in FAS, suppose it hits this rising upper band of support. Maybe you want to book some profits. Wouldn't it be nice if the computer told you, hey, you just hit resistance on a weekly time frame. Make some profits real here. We're probably going to be long of the banks this week. So we're going to keep this active for a while. Triggered multiple times, breakthrough touch, bounce, and we're good to go. Let's check out seasonality on the banks. I don't know how far FAS goes back. We may need to bring up yeah, that doesn't go back far enough. Let's bring up XLF. It trades along with the FAS. Okay, we can go back to 1999, over 23 years. November up 64% of the time. December about the same. So seasonally favorable. Let's drill down here a little bit. (2011) to present. That's 11 years worth of data. You can see things have changed. October, we're up 82% of the time. So a very strong period of time. The fourth quarter of the year over the past 10 years. The banks, folks, the banks. Let's quickly take a look at the weekly chart. This coming week is up 70% of the time over the past 11 years. The risk reward is in your favor. And the good part is, in addition to seasonality and the price action, is that earnings for the money center banks are in the rearview mirror. You are going to have the regional banks this coming week, but unless you're trading a DPST, which is a regional bank ETF, I wouldn't worry about them. Worried about your money center banks. They've already reported. The market has spoken. They're going to take the banks up higher. LIT, lithium, weekly chart. Again, folks, the power of the automated trend lines. Take them off, put them back on. We broke out last week. Next stop, we're coming up here to about $89.50 per share. We're going to be looking for a retrace. As a matter of fact, I want to use a daily chart. Daily chart. I'm going to overlay on this daily chart my weekly support and resistance level. They will appear in dash line with our daily support and resistance levels in solid line. So I want to know if we retest support, which is weekly. Stokes are rising. Very, very, very nice chart here. Nice breakout on a weekly time frame. We're also looking at DDOG going into the new trading week. We're going to begin with a weekly chart here. Nice breakout last week. Daily chart. We're stuck in a congestion area. Let's overlay the weekly charts on top of a daily chart. Not enough data. Let's see if we can do this for ourselves. I like it right here. 144.41. If it makes a new higher high on the week, we're not going to chase it. We'll keep some sensitivity on. And we're good to go. All right. BTBT. We'll leave it off with that. Constant auctions. This transpire looks neat. Yeah, man. It's a great tool. We use it all the time. Great automated technical analysis, great alerts, and really good scanners. You have Tupperware at $1.76. Good for you. Good for you. All right. Let's leave it off with BTBT. I already like it. Here's the weekly chart. So on the weekly chart, you have monthly. See over here, monthly support and resistance in dash line. In solid line, you have weekly support and resistance levels. I don't know what my deal is tonight saying that. Great consolidation here. And we broke out last week, actually 2 weeks ago. Continuation move up higher last week. A little bit of a fade, but I'm loving these Stokes. So I think that this is a buy, small position. You could add more on a retrace, but I would get even more aggressive on a breakout above these weekly resistance levels and the monthly resistance level. I would kind of ignore the monthly resistance level, because if you buy right above there, you're going to have weekly resistance levels immediately above. So I would side with the weekly resistance levels. Very nice chart. Bullish on BTBT. With that, folks, I wish I could take everybody's request. I had to go with members first and super chats. And speaking of super chats, John Spencer, he gave me a super chat, but I don't see a request. Thank you, John, for the super chat. I appreciate it. Folks, thanks for joining in. Smash the like button, subscribe to the channel, share with a friend. Everybody have a profitable trading week. And thank you very much for spending some time with me here. I truly appreciate it. My honor. And have a great night. Be well.